The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's down 64, S&P's down 5. Comp index is at this particular point, having been quite stellar early on, down 1 at 44.51. All of a sudden, if ever there was if ever one had a right to be very, very, very upset, this is the day that I'm very, very upset. I'll explain why in a moment. Anyway, back at the ranch, you've got gold, which was down 20 earlier on, now down 9 at 13.05. I'll explain what's going on. And silver's down 21 cents at 19.68. Bonds, which were up sharply, have gone up sharper at 117.80 for the TLT, the 20 Lehman iShares. Let me get rid of that. And let me see what happened to the dollar. Dollar has gone 7 days, or 6 or 7 days, without making that new recovery high. I said, and I explained, it took a long time, especially since it was Friday, a week ago, I believe, Friday or Monday. But I was looking at it, and I said, I'm going to explain something. It was actually middle of last week. So it's 1, 2, 3, 4, 5, 6, 7 sessions without making a new recovery high of 81.73 to go 1 penny above the U.S. dollar index high that was made on the 6th of August. And what I said is this particular pattern, the Chapman wave, and I spend a lot of time in my Master Trader series when I do this, especially at a level 2, discussing how that fast-moving average in the MACD can be so informative. And what happens is that very often when there's a move like this, when you get that potential instant restart right there at peak D, but the MACD doesn't even acknowledge that there was, or even the stochastic, that there was a dip. It goes straight on up. Then very often you go to a peak G and you do not get the D and E of the second buy mode in the instant restart. And look what's happened. Dollar's pulling back. Days young, it could go higher. That would start another leg. It would actually be a C if it went above 81.69. If it did today, it would be a B. So this is the very important phase at this particular set, A, B, C, D. It would be a D/B. So what we're looking at is, out of the blue, you've got the market moving higher as if nothing's happening in the world. Just a beautiful, look at this, just a beautiful uptrend in the making. Right there. It goes to a leg B. It goes to 16,775 in the Dow, and into that huge, ugly candle. Remember, I think it was a Thursday or something, that on the 31st of July. Oh, it was an ugly candle, 317 points or something down. Well, we were busy filling that when out of the blue there's a report about the Ukraine forces fighting stop in humanitarian aid. Anyway, there was some report about the Russia-Ukraine situation, and plop, the Dow goes from 16,775 down to a low of 16,619. Touches the 9-period exponential moving average of 16,000, and now it's at 16,626. It was 16,619 when I wrote it, 16,616 when I wrote this last night, this morning when I updated it. And I explained that what I'm looking at is some kind of a reversal today, but it was very hard to gauge exactly what would happen. But I was suspecting that the diamonds, they were in leg C, that the 200-period moving average right there, the 167.17 level in the 120-minute chart, would become some kind of a barrier. And as a result, very, very seldom over the year do I do an options trade for my subscribers. But we often do, when we do often choose a white lightning. That's the Thursday or Friday. No, not always the case, but this is when you get the best opportunity. Why? Because I don't want to spend any money on this. I done options for years and years, and then I eventually found that, you know what? Pick the exact timing, the exact position that you want, and try to get something way less than 20 cents or less for an option. So if you buy 10, that would be, we bought this morning the Dow Diamonds at 18. They closed at 45 yesterday, 40 to 45. That is huge. I mean, it's just huge. That was good, perfect timing. So we're in the trade, and it's looking good. It's looking good. It dips down. I said put a stop in of 12. Went to 13. Then it rallies up to about 19. Then it comes back down. And then all of a sudden it slides because there was that little sudden burst. We get taken out. We get taken out for our stop, 6 cent stop. Normally I would say, you know what, at that price, don't even put a stop in. It's just worth taking it. It's just, we don't call it play money because it's serious stuff, but it's there because it's a very inexpensive trade, and the risk reward is often huge. It's at least 50% to 1,000%. We've done that with IBM a number of times over the years. Well, what happens is we get stopped out. It goes down to 11 cents. I can't believe it. It goes to 11 cents. Just stops us out. And then suddenly there's this movement. Where does it go to? It goes to $1.06. Now you tell me. I mean, you tell me. Is that nice? Well, let me put it this way. I know that there are some traders who get my opening call, that's my daily service, who probably held on to at least some, if not all of it, thinking, you know what, let's give it a little more time because everything happened so quickly to get in, and it was working, and then there was that little pop-up that looked like it was starting to fade. But come on. That would have been a very nice profit from 18 cents to, lo and behold, there it is. Now, why is this on the second one? Oh, and here it is on the 10-minute chart, because I was charting it on the 10-minute chart. And what I do, you know, in the Chapman Wave methodology, we look for Ds. That's where you've got to be a little bit careful, or that's where you can recycle. Well, from the low bar of this morning, what's today? No, that was the 11th. From the 11th at 2:30 in the afternoon, it went peak ABCD, pulls back, so it's another ABCD, fourth highest peak, pulls back. Then this morning it goes ABC and then spikes up to D, and then pulls back, but it actually makes a slightly higher E. It goes to 167.46. This is the Dow Diamonds itself. It goes to that E, and then kaplop. That was quite something. All right, well, that's the way it is in the options field. Now, as I say, some people I know, I'm probably getting an email or two saying, we managed to keep some, or thank you, we did, oops, I don't want to lock. But we're out. We lost some money, and then it worked. But the thinking was exactly right. And since this is Technical Friday, we look a little bit more into the Chapman Wave methodology. I thought I would go through it. I don't want to go through the trades in great detail because there's a lot of proprietary information for the subscribers. But in this particular instance, I thought, okay, let's just show it the way it is. And wasn't that a pity, huh? Wasn't that a shame? So let's go to the E-minis, and then we're going to finish the numbers, and we've got callers on the line. So let me just do this. Here is... No, I didn't want to do that. Oh, no, I just took that out, did I? All right, I'll have to redo that. So it doesn't matter. I'm going to go to the ESU 14. And this is one of the reasons why I felt not 100% confident, because it was a C in the Dow Diamonds. But in the E-minis, the 120-minute chart was going to an F. You see that trend line? Let me show you. This is a little bit of technical stuff I want to go through, and then we're going to go to the callers. So what we got here, we've got a trend line, and I spoke about this in my every day. I show this chart it shows the 1 minute, 120-minute chart on the right, and on the left shows the daily chart right there. And I discussed the resistance levels. I discussed what we're looking at, discussed which one is working better, and where the parameters are. It's just a lot of detail. And then also, for instance, I gave all this information, and the 120-minute chart has 1941 as support. What was the low today? 1941, an ounce bounce, and trying to get back into that little bit of that rising price movement. So we went to a leg F, and this is probably going to turn into a peak F. We don't know, but the MACD and stochastic are turning down, so we'll see. So everything was in place for the trade. I'm sorry, subscribers, if it didn't work out exactly the way that I intended. It's a shame. It would have been a lovely. Oh, can you imagine going from 18 to over $1 all in 20 minutes? So that's the way it goes. All right, back at the ranch. I want to do just one quick thing, then we're going to go to our callers. U.S., I just want to show bonds. Look at that move in bonds. This is the daily. I have to call this a leg F/B. Most of the evidence points to it being a B, but I'm just going to be conservative. I'm saying F/B, and we're going to watch to see what happens here in the daily bond. This is a continuous contract. Look at that leg E in the weekly, which might recycle, but I'm calling it E for now. And let me get rid of this one here. And look at that breakout in the look at that falling axe breakout. Well, the month is young, so we can't talk about it, but it has spiked above very nicely. And the MACD and the stochastic are all pointing towards upward movement in bonds. So that's one of the reasons why we wanted to remain in our short position in the Dow and the inverse VIX index. We're going to go straight to Dan in North Reading. Hi, Dan. How are you?
Good. How are you, Basil?
Well, I would have been just fine, but that's the way it is. So you wanted to look at?
I want to look at Lane. I don't have a position in it, but just kind of stumbled across it and noticed that it just hit a long-term low from '08 and then kind of is having a little pop, so I thought maybe play a bounce on this.
Could you tell me and the listeners how did you come across this?
Just accidental.
And if I had to ask you what they do, you'd probably say, I don't know.
Yeah, it was just dumb luck, really. So.
Wow. So I'll look into it in a moment. In the meantime, back at the ranch, the candle that's been formed it's a horrible looking chart in the monthly chart. It's just a little less than horrible. Let's call it terrible in the weekly chart. But look at this. Although the stochastic's flat at 5.8%, the MACD is flattening out, and the histogram is just starting to show a little bit of a rise going towards the 0% line, but it's still at minus 0.35. The candle that's forming is the first positive candle with the chance that there's some kind of, not a positive divergence, but a better divergence between the stochastic pulling back with the price, because the price is starting to hold and the stochastic's holding. But I'm interested in the daily chart. When I just took a quick look at it, the doji candle that formed 3 days ago is going to be really important, as well as today's close and Monday at noon. So we'll be right back with Dan North Reading. We're looking at LAYN, Lane Christensen Company. It's down 19 cents at 1072. Interesting chart. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and we are on with Dan North Reading in Mass, and we're looking at L-A-Y-N, and we have said that is, in fact, Lane Christensen. Oh, I didn't finish correct. That is not typed in correctly. Christensen Company, Global Water Management, Construction, Drilling, Small Cap Stock, and boy, it's getting smaller and smaller, having made an all-time high at some point of 59.19 back in October of 2007. Double tops at 58.26 in September of 2008. A year later, makes that beautiful U-shaped pattern, kaplop, and it comes back down. It goes to $10.36, rallies in a peak A, B, C, D in the monthly chart to a high of 38, round number high. Oh, what a beautiful chart this is becoming in terms of pattern high, pattern formation. And then what does it do?
It's already pulled back quite a bit just since we've been on the phone.
And look at this. It goes back down to 10. Now it's at 1068. But wait a minute. 1068 is not the issue. The issue is, watch this, the issue is that there is a very long-term double bottom potential in place. Now, I don't understand, as a water company, I shouldn't say this just off the top of my head. Maybe over the weekend I'll have a chance to look into it a little bit deeper. But a lot of water companies that I had followed until recently had done quite well. This one seems to have done everything wrong, because it's at lows. It's testing the 10.36 low by breaking into the 10.10 area. And right now, 3 days later, it's had a bounce, nice percentage bounce from the 10.10 level to 11.10. Right there, 11.10, made early this morning, and now it's pulling back. But the 120-minute chart is the one that fascinated me, because the more I looked at it, the more I said, that is a beautiful base that's been built. Yes, you broke it, but in the parlance of the Chapman wave, a break of the H or the M pattern, the lowercase h to M pattern, that takes out the low bar, the most significant left side low bar, the one that we've been focusing most on. Sometimes it does an intra-bar at some point, but this is the longer-term one, and that's why I always look to that major one. In this case, it's the low of 21st of July at 11:30. Well, in this case, it took it out, and the very bar that took it out, look at that, rallied very sharply the following bar. And that's exactly what you look for. And that's if this is peak A, B, and this is C. And there's a legitimate case to be made that the high bar of, folks, we're looking at Lane, L-A-Y-N, it's called, whatever it's called, Lane Christensen Company. And lo and behold, the high that I made on the 24th of July at 11:41, today's high is so far 11:10. And it looks to me like if it can hold 10.77, the 9-period moving, I give it a little room. I prefer not to take out 1077, but if it takes it out, it suggests to me, yep, there's a little bit more backing and filling. But I think you've spotted something that, in risk-reward terms, now in business terms, this thing looks like it's like a J.C. Penney. It has a lot of work to do. But on the other hand, the test so far in the 120-minute chart, in the daily, and in the weekly with a candle that's forming right now, suggests that if next week, Monday, Tuesday, Wednesday, I would give it even until Wednesday. If it hasn't tested the 1077, let's make it 1063, 60 area, but I prefer to go with the 1077. My suggestion, did you actually, this is just one that you picked up and now you're looking at it, or do you actually have a little position?
Well, I thought I'd call you before I entered it, so I haven't done anything yet.
Oh, what a pity. While we were talking, you had a great show. Oh, wow, someone's listening. Unbelievable. This stock, folks, it was just minutes ago that it was down at the, it was somewhere around 1083, I think, right?
I think it got all the way to 1070, 1056.
10:50, and now, as we're talking, it's gone to 11:15. It's now back down under 11, but someone's listening. Now, I wanted to do one other thing, which I'm often remiss when I look at stocks, especially for my subscribers. It doesn't happen often, but when it happens often enough to make me upset that once in a while, I'll doing all my homework, I'll do everything, and I'll love everything about it. And then after I post it and I say that it's a recommendation, I notice that the volume is just, I look at on-balance volume, but I forget about the volume itself. And in this case, the volume is really light. That's the reason why I think it popped up. Someone heard the name or something happened, and that's how it can move so quickly in so short a time. Because it only had, yesterday, it only had 205,000, but today already it's had 130,000. Something's going on. I think I don't know how you picked it up. Did you just see it go by, or you got a scan, or?
No, just stumbled across it, so, yeah.
Because sometimes
I saw that monthly chart
by typing in the wrong letter. So that's why I wanted to know.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time real-time charts, and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Just real quickly, I just want to show the 30-minute E-mini went to a peak in the Chapman wave, 6th highest peak, and then zoop, came down. And in fact, it's still acting very poorly with the S&P down 7, the Dow's down 84. So this is the sudden kind of move that we've been looking for. And that's one of the reasons why I did not want to short gold, because I think that gold is in play in a trading range, and we'll know over the weekend into Monday whether gold is going to be a participant or not. Let's go back to our caller. We've got Dan in North Reading. Dan, you still there?
I'm still here.
Okay, so here's the reason why I thought that I want you to just hold on a second, and I asked you about how you came across it. If I'm looking at a much shorter term chart, like the 30-minute, the very long wick candle that was just made at 11:30, closing at 11:30, and now we're into another bar that closes at 12. What I'm looking at here is it's holding really well. Now it's back to 1080. So I'm going to say to you, keep it on your list. It's really a very ugly chart, but on the daily chart and the 120-minute chart, this is the first sign that I'm seeing that I don't know if there's going to be buying, I don't know what it is, but there's action there. Someone seems to know something and is involved in something, because the kind of move that it's had so far in the last 3 days from the low that it just made at 1010 that was on the 13th of August. This is very nice, but it's only nice in terms of a trade. And what I would say to you is keep it on your list. If it drops, if it actually holds into the close today, regardless of what the market does, if it closes between 1077 and 1090, preferably towards the higher end, I would actually take a little nibble before the close, and I'd just start a tiny position. Why? Because if there's news related, and this is the way it's going to move, it's going to have to move probably on news and good news. It needs to very quickly go above the $11.15 high that it made this morning. And if it does that, it's saying, hey, I think that there's now a little bit of a counter trend play in the short term, but the weekly has 11.99 as very strong resistance. I would treat it as a trade, and if it gets there, you either exit or you take off 2/3 of the position, maybe keep a third, or maybe next week sometime we can talk. But yeah, I think you got your eye on something just in terms of risk reward that has the potential to give a nice percentage gain. I wouldn't hang on too long, but I think in the shorter term it's a play. Hope that helps you.
All right, great. Thank you, Basil.
Great. And if, of course, it goes below 10.55, I don't think I want anything to do with it until it stabilizes. Let's go to George in New York. George, how are you? George, you there? I think I got George. George in New York. Let me just check. Yes. Hi, George.
Good morning.
Good morning. How are you?
How have you been?
I've been well, thank you. And back to playing tennis, enjoying myself, and that's good.
Good for you. Enjoy the summer, the remaining part of the summer.
Well, you know, even today it's very cool here, but it's sunny, and that's good. So,
yes, it is here as well.
Yeah, very interesting. This is the weather we've had recently is very strange indeed. I don't know what you can contribute it to, but the fact is that it is a little weird. So you wanted to look at?
Today, I want to look at a company called Vitamin Shop, VSI.
Now, did they ever change their name, their symbol?
No.
Okay. So this I remember, it must have been in 2011. I remember being in, I remember exactly because we were in Newport, Rhode Island on vacation. It was sometime in the second week or so of June. And I had looked at the stock quite often, and I don't know what the reason was. I remember looking at it because I think I was contemplating putting it into my newsletter, and I didn't know anything about it. And lo and behold, it started to have a very nice move. I can't remember whether we got it or we didn't get it, but the point is, I don't know why some stocks have a picture attached to it in my mind. And I remember I know exactly where it was. It was a little, one of those vintage second-hand, not second-hand, but a vintage clothes store, a very quaint little place that we were just kind of walking along, and we stopped in. And, of course, I was biding my time, and I had my cell phone out, and I was checking on stocks. And I remember distinctly checking on the price of VSI, Vitamin Shop, Inc., now it's trading at 38.05. It made a high in 2013 in February at 65.93, and it's making recent lows. And now it's had its first bounce, a little different pattern than I was looking at with Dan North Redding of L-A-Y-N, sorry. And because this one, the weight of the force, I don't know if it was news last week or whatever, but I know that you're going to tell me that you're looking at it and you can see some value on a fundamental level. Am I correct?
Yeah, very good.
Okay. So
you know my pattern well.
Well, that's a very good pattern, believe me. So, yeah, what do you see?
Okay, well, technically, and that's why I wanted to call you today. What I see here is, let me give you thing, a background. You know, this is a retail store that sells vitamins of all different types
Correct,
to the
yes.
consumers. And they would deal in the past with contract manufacturers. So basically they had X amount of markup after they had contract manufacturers making the vitamins for them. Well, back in June of this year, they bought a small manufacturer.
Oh, okay.
For $85 million. So now we have a vertically integrated company.
So now they are complete.
Correct.
Wow.
So what happens is it will increase the bottom line eventually going forward. That's one. Two, if you look at the balance sheet, it's excellent. Three, if you look, they just had earnings August 5th recently, that just passed last week. Same-store sales were up 4%, but their e-commerce is up almost 15%.
So the e-commerce, from what you're saying, has expanded exponentially.
Yes, correct.
Okay, good.
Correct. And, of course, earnings per share year over year is up 9.6%. So, you know, we have a healthy company here. The only thing is, of course, you know, when it was at the 55 level, it was what I call it an overvalue stage.
Okay.
So now we're coming into the lows, and, you know, we're still in a downtrend. But what I'd like to do is find out where the bottom is on this stock to start building a position.
Okay, all right. That in fact is for what you're talking about, because there's always an initial outlay and the appreciation of that, both appreciation financially but appreciation by stockholders, takes a little while before it filters down to the bottom line. That's really the issue. So
that's correct. But what's good is, at least if, you know, you're a working person or something, you know, you could go about your business. You don't have to concentrate on the screen, and maybe a year or two down the road, you have a $55 to an $80 stock.
So, Angie in the Den, there was a question Peaky wanted to know about. There were two questions. One question was, he asked, how did George come by TFNN?
Probably numerous years ago. I was driving in Florida, and I heard it on a local station.
Okay, yep, that's the way a lot of people got to hear about TFNN, or word of mouth, but yeah, that's one of the ways. Great. So the other question is, let's see. So Peak asks about how does Vitamin Shop compare to GNC? And then Angie in the Den says, Vitamin Shop, much better than GNC, much bigger store and more products. So we got a little news there. But what I really wanted to say to you is, in the pattern that I look at for the monthly chart, there's tremendous support with the candle and the technicals, etc., that says 34.49 is the area that has to hold, because if it closes below that, you've got 30.39 as the 200-period exponential moving average, and that would be a downside target on I wouldn't say worst-case basis, because you never know in this business. You know, the vitamin area, in the supplement area, and over-the-counter alternative medicine is. You know, there was this huge outcry about the costs of medical health, et cetera, et cetera. Well, do you know that the over-the-counter, the whole industry itself is billions and billions and billions? People spend a fortune on alternative medicine. Mm-hmm. So it's always fascinating to me, the mental framework that goes with certain things that people just expect should be there, and what isn't, and they're prepared to buy. So in this particular instance, the same as when someone turned around and said, you know, the water that everyone's buying with those bottles and everything, if that was translated into gas, you were paying that for gas, you'd be paying $12-15 a gallon or more for gas. Nobody thinks about it that way. So now let's do this. In terms of the technicals, The reversal this week in the weekly chart says, be a little careful. It looks like it wants to test 36.90, which is the low this week. A low of last week. Yeah, low of the 8th of August. But here's the thing. If there is some kind of support and it doesn't take out 37.85, that was the high of the day of August the 8th. If it doesn't take that out by Tuesday, and in fact, VZI, Vitamin Shop, is actually trading above the 9-period moving average of 39. I would start the smallest position saying it's only a starter position. Why? Because even if it gets away to the upside and goes to the 41 level, the chart pattern that I'm looking at says, you know what, there could be a retest of the 37s a little later on. So I would treat it as a starter position. The real positions would come on. Let's see, in the weekly chart, if it breaks, yes, the weekly chart suggests that if it breaks 36.90, then the area of the 35s is going to definitely be a very important level. So 34.49 is really key, but in between that, 35.50 to about 34.50 is the area that I would actually start the position a little bit more seriously, but only, and this is really important, if the stochastic is not in the daily chart, stochastic's at 18%. I know you don't always look at these technicals, but try and look at the stochastic or give me a call. If the stochastic goes to 15%, I'd be very careful, because that's going to suggest, you know what, it could even go a little lower. Okay. So that's really the area. A little nibble if it goes up from here into Tuesday. But other than that, I'd wait. I'd have patience. Wait for somewhere between 36. Start looking at it much closer. In the 35s is where I would start. A little bit more than a little position. I start maybe a little bit like not even a third, but at least going towards a third position. And on that one, because it's a third, I'd have to have a little bit more of a stop of about 2 points. It's a little bit wide. I don't usually do that. But I think that whole area of 35 to 34 is going to be the first big containment area for Vitamin Shop.
I just want to answer you one quick question regarding the question in the den about GNC.
Yes.
This is a direct competitor to GNC. The only difference is GNC has retail stores in a lot of major malls. And by having the store in the major malls, the overhead is higher than somebody like Vitamin Shop that has their stores in strip malls. Overhead is less. So again, it reverts back to the bottom line, which reverts back to the shareholder.
And GNC is trading at 34.93. 29.90 is the 200-period moving average in the monthly. But the weekly has started. That's the reason why I think you're seeing a little bit of a rotation going into these stocks. So there's a chance that GNC is starting its bounce. But if Vitamin Shop, in fact, has a greater online presence, they will do catching up very soon. So, hey, nice call, and thanks for all that information.
All right, very good. And you like Monster Beverage today. That worked out well.
How about that? Worked out beautifully. Good call. Thank you so much.
All right, Basil, be well. Thank you.
You too. Appreciate it. Congratulations on your fundamental analysis with the technicals. So have a great weekend. So, folks, let's do this. I'm going to. I said that I would do a little bit of a lightning round earlier on. So there were a couple of quick questions. Let me do this maybe before the break. Here we go. QQQ was the first one. QQQ has made a leg B, but that leg B has gone to a new recovery high. There's a chance I'm going to have to call it now. It changes from a B to a leg F/C. Really important. It's being stopped by the market conditions, not by the fact that there was terrific momentum going into it. And the monthly chart, weekly chart, it's F/C. Let me type that in. This is the PowerShares QQQ Trust Series ETF. This is, because it was showing so much strength, I could not go heavily short. as much as I wanted to.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Folks, stay tuned for Nico and Paige. A great show. Now, let me just go back to this. I don't want to sound like a crybaby, but believe me, it's very upsetting seeing a 605% gain. No, we didn't get it because we got stopped out by 2 cents. on the option call that we had, the put option, bought at 17 cents today, stopped out at 12 cents. The low was at 11 cents. And look at it now. It's at $1.20. It's actually much higher than that. Oh, my goodness, it's way higher than that because the next position will be at least $1.20 now. It will be at least 137 because the Dow's down 127. Thank goodness we stayed short the Dow, and we are short via the XIV, the inverse VIX. So the question is, so the Qs, real quickly, just to wrap up with the lightning round. Oh, I didn't mean to do that. No, I didn't. So the Qs right now are trading at 96.61. It's leg B right up again. Oh, I love this. Look at this. I drew this chart. Didn't have a chance to show it this morning, but I drew this chart earlier in the week, and it showed, it said it was impossible to do, to get to the high of 97.32, or even the higher than that, of 97.51 in this cup formation. And there it is. It goes peak A, peak B, and now it pulls back very sharply. So theoretically, we should go to a C and D, but it's a 120-minute chart, which is subject to the larger trend of the daily. So this is going to be very interesting. Why? Because with the new high, a failure at a leg B is really unusual. So I have to consider that's an alternate wave in the daily that is probably going to be F if by Tuesday, not even Monday, it has to be Tuesday at the latest, the Qs slide under 95.90, the 9-period exponential moving average. That'll say that the MACD is going to deflect lower and the stochastic won't get to 80%. Going to watch this real closely. Next thing that we're looking at, okay, so that's it. And all I can say is that by Tuesday, if there's a big bounce and it goes from this 96.49 area to over 97.30, that is outstanding action. And we should see higher prices in the Qs. So it's either a failure, a point from down from here, or a point up from here says, hey, that's great action. So that's that. Next question was MUSA. I'll just do that before we break, and then I'll do a quick summary. MUSA pulling back from a peak D in the daily, and this is called Murphy USA, a national gas station, convenience store chain. It could be a double top in the weekly. I'd say that if you were long, I'd put some kind of a stop on some of my position. It's at 51.52, just under 51. I'd say, hey, I'm taking something off. If it starts to fill the gap, if you've got a longer-term position, watch out, because if it breaks into the 49.50 area, it says that U pattern could go all the way to the bottom, could even go down to the 47.20 level. But that's, if you got your core position, treat it as a core position. You're only trading off the shorter term, and those are the levels to watch. I think I missed out another one. Let's see. Let me have a look here. Peaky in the den says, I haven't seen you this upset before. Well, you know what? There's a reason for it. I don't even see it now. Okay, so this is the action that I'm going to say to you. This move in the Dow is the only thing that has been able to disrupt the market. And $1.47. That is unbelievable. It's over 1,000% gain. We just upset. Who's upset? So. Well, that was the option trade of the week, and we missed it. I'm sure that there are some people that actually kept it, but, I've got strict rules about this. Out is out. So let's continue. So here's what I'm looking at. The VIX index. This is absolutely to do with the VIX index. Look at that spike going from under 12, 11.89, all the way to 14.69. A close here on the weekly chart will say, hey, watch out. There's a very big sensitivity to action that's going on. Be careful. Very select market. Keep your shorts. Keep your longs. If it's working today on either side, that's the trend you want to be with. Hey, folks, check out my opening call this weekend. I'll be back on Monday. Have a wonderful weekend. And stay
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.